BigBear.ai is currently trading at 4.27, showing a solid upward move of 4.04% so far in today's session on Friday, May 15, 2026. This intraday strength follows a period of heavy accumulation as the market starts to separate real utility from speculative noise. While many retail traders are focused on the immediate green candles on their Robinhood app or the latest alerts on the Fidelity mobile app, the real insight here isn't just the price action. The narrative that BigBear.ai is just another small cap struggling to find its footing is being challenged by a massive shift in their backlog, which recently jumped to over $280 million. Most people expect these smaller AI players to burn through cash until they disappear, but the reality is that BigBear.ai has quietly entrenched itself into the national security infrastructure in a way that makes it very difficult to dislodge. When you look at the landscape of online investing, the general expectation is that companies like BigBear.ai will stay confined to niche government contracts. Investors often think of them as a services company that provides bodies for projects rather than a scalable software platform. However, the deeper look into their first quarter performance shows a strategic pivot. They aren't just selling hours anymore, they are selling products like Ask Sage and Shipyard AI. This is a fundamental change in their business model that the market hasn't fully digested yet. While the broader sentiment might be cautious because of past stock dilution, the contrarian view suggests that the current valuation doesn't account for the high margin potential of these new software integrations. If you are using investing sites to track your portfolio, you've likely seen the volatility, but the tension between the unprofitable contractor label and the platform-centric AI leader reality is where the opportunity lies. The daily swings we are seeing today are backed by significant institutional activity, specifically a 14% increase in their total backlog. This isn't just small retail trades moving the needle, it's a reflection of serious capital recognizing that the intelligence community and the Department of Defense are increasingly reliant on predictive analytics. If you look at Interactive Brokers trading data, you can see the volume spikes coinciding with these contract announcements, such as the $53 million classified win recently disclosed. This kind of momentum often forces a reevaluation of sector positions. Even for those who prefer self-investing or using a SoFi active investing account, the macro picture for defense spending in the AI space is becoming a dominant theme. We are seeing a move away from general-purpose AI and toward highly specialized, secure, and mission-critical applications where BigBear.ai holds a distinct advantage. For anyone managing their own individual brokerage or checking their Fidelity mutual funds for tech exposure, it's important to understand what BigBear.ai actually does behind the curtain. Founded decades ago and reborn through recent acquisitions, the company focuses on decision intelligence. This means taking massive, messy data sets from supply chains, national security sensors, and digital identities and turning them into clear, actionable advice for humans. They work in sectors where failure isn't an option, like airport security at O'Hare or identifying vulnerabilities in cyber-physical systems for the military. This isn't the kind of AI that writes poetry, it's the kind that prevents logistics collapses and identifies threats before they manifest. Their TrueFace and VeriScan products are already being used in travel and trade hubs, creating a recurring revenue stream that provides a floor for the stock price. If you're looking for investment help or just trying to navigate these choppy waters with a Robinhood stock trading strategy, the focus has to stay on the execution of these contracts. The market has been skeptical of BigBear.ai because of their net losses, which were over $56 million in the last quarter. But here is the catch that many people overlook. A large portion of that loss is often tied to valuation adjustments and integration costs from their recent acquisitions. When you peel back those layers, the underlying operational efficiency is improving. This is the gap between expectation and reality. The expectation is a company bleeding cash. The reality is a firm aggressively scaling its footprint to capture a multi-billion-dollar market. Comment below how many shares of BigBear.ai you currently hold in your portfolio and whether you think the defense sector will continue to lead the AI market this year. Looking at the future catalysts, we have to talk about the integration of Ask Sage. This generative AI platform is already being used by over 100,000 users across 16,000 government teams. That is a massive footprint for a company with a market cap that is still relatively small compared to the giants. If they can successfully cross-sell their other services to this existing user base, the revenue growth could surprise everyone on the upside. For those using Schwab Intelligent Portfolios or a SoFi robo-advisor, these kinds of niche high-growth stocks often don't make it into the automated mix, which means manual intervention in a self-investing account is often required to get this specific exposure. The risk, of course, is that the government procurement cycle is notoriously slow and lumpy. A win today might not show up in the financials for another 6 months, which tests the patience of even the most seasoned trader on the Interactive Brokers platform. The current trend in online investment is toward companies that have a moat, and for BigBear.ai, that moat is their security clearance and historical relationship with the US government. It's not easy for a startup to just walk in and start handling classified intelligence data. That level of trust takes years, if not decades, to build. While you might find plenty of other AI stocks on various investing sites, few have the specific credentials required to operate at the edge of national defense. This is why we see so much institutional interest despite the volatility. Fidelity Brokerage and Fidelity Wealth Management clients often look for these types of pick-and-shovel plays in the AI space, companies that provide the essential infrastructure rather than just the flashy consumer apps. As we move toward the back half of 2026, the macroeconomic pressures of interest rates and government spending will play a huge role. If the defense budget continues to expand as projected, BigBear.ai is perfectly positioned to capture a larger slice of that pie. The expectation is that high interest rates will hurt small-cap tech, but the reality is that mission-critical government spending is often decoupled from broader economic cycles. This provides a level of protection that many other tech stocks simply don't have. Whether you're trading on the Robinhood app or using the Fidelity mobile app to keep an eye on your long-term holds, the focus should remain on that growing backlog. It's the most honest indicator of future performance we have. The tension between the skeptics who see a struggling contractor and the bulls who see a burgeoning AI powerhouse is what makes BigBear.ai such a fascinating study in market psychology. The stock is currently sitting in a technical range where a break above the recent highs could trigger a massive short squeeze, especially given the high volume of trading on platforms like Interactive Brokers. Investors who have been following the stock on SoFi Invest or through their Fidelity IRAs have seen these cycles before. The key is to distinguish between short-term price noise and long-term value creation. The transition to a platform-centric model is the most important part of the story, and as that continues to manifest in higher margins and more predictable revenue, the gap between market perception and fundamental reality will likely close. The recent partnerships with major groups like the Kraft Group and various maritime shipyards show that their technology is finding a home in the commercial sector as well, not just in the halls of the Pentagon. This diversification is vital for reducing the risk of being a one-trick pony for the government. By applying their sensor fusion and predictive modeling to global trade and manufacturing, they are expanding their total addressable market significantly. For anyone looking for investment help or analyzing stock trends on Interactive Brokers trading windows, these commercial wins provide the evidence needed to support a more optimistic long-term thesis. In summary, BigBear.ai is navigating a complex transition that the broader market is only beginning to understand. The live price of 4.27 reflects a growing confidence that the company's recent contract wins and strategic acquisitions are starting to pay off. We've seen the expectation of a stagnant contractor be consistently challenged by the reality of a $280 million backlog and a 14% growth in new business. By focusing on the intelligent edge and secure generative AI, they have built a defensive position that is hard to replicate. Whether you are self-investing through a Robinhood account or managing a complex portfolio on the Fidelity trading platform, the lesson here is clear. Look past the headlines and focus on the technical integration and contract fulfillment. The contrast between what the crowd believes and what the data shows remains the most powerful tool in your investment arsenal. Keep a close watch on the upcoming quarterly reports to see if the margin expansion from the Ask Sage integration begins to hit the bottom line, as that will be the ultimate confirmation of this shift in the business model. Authority in this market comes from recognizing these shifts before they become common knowledge on every investing site. Stay focused on the mission-critical nature of their work, and you'll have a much clearer view of where this stock is headed in the months to come. The current momentum is a strong sign, but the real test will be the sustainability of this growth as they move further into the platform-centric space. Keep an eye on those volume spikes in institutional filings, as they will tell the true story of where the smart capital is moving. As the market continues to evolve, the distinction between hype and utility will only become more pronounced, and BigBear.ai is positioning itself firmly on the side of utility. Stay sharp, watch the data, and always question the prevailing narrative when the fundamentals suggest a different path. Your ability to spot these discrepancies is what will ultimately drive your success in the ever-changing landscape of the stock market and the wider world of technology and defense. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, unshare with your friends, bell, subscribe for more updates.